Hello everyone, I hope you are doing well. In this video, we'll talk about the recent rise in gold and silver prices and what this means for people who invest. Gold and silver have gotten a lot of attention recently. Gold has gone above $4,700 per ounce and silver is trading above $90 per ounce. These are record-breaking prices for both metals. When prices go up this much, you might wonder if you should own these precious metals in your investment mix. The key thing to remember is that good investing isn't about jumping on whatever is doing well right now. What matters more is keeping things in perspective and knowing how these types of investments work within a well-planned strategy that matches your money goals. In the next few minutes, we'll look at some history that helps explain this idea. First, let's look at why gold and silver prices have gone up so much. One big reason has been recent disagreements between the White House and the Fed. This is the group that controls interest rates and money supply. These disagreements have raised questions about whether the Fed can make decisions independently and what will happen with interest rates, especially since Jerome Powell's time leading the Fed ends in May 2026. Lower interest rates and the possibility of rising prices for goods and services puts pressure on the dollar, making it worth less. This leads some people to look for investments that hold their value over time, like gold and silver. Another key reason is that central banks, which are government banks around the world, have been buying gold steadily in recent years. They've been buying even more as global tensions increase and as worries grow about whether currencies will stay stable. Both metals also have practical uses in making electric cars, solar panels, and computer equipment for artificial intelligence. So gold and silver serve different purposes, which has pushed their prices higher in recent years. The problem is that gold and silver, like other raw materials, can go through big swings in price. For example, in the 1970s, both metals went up sharply when the economy struggled with both high prices and slow growth at the same time. They also rose during the 2008 financial crisis and again during the 2020 pandemic. But in each case, prices started falling once things got better. Often it took many years, sometimes decades, for prices to climb back to where they were before. This creates problems for people who buy these investments just because they've done well recently. The chart here compares gold's performance to the S&P 500, which tracks 500 large US companies. Since the market peak in 2007, while gold has done well at times, stocks have still done better over the entire time period. So the reason to include gold and silver in your investments is that they move differently than stocks and bonds. However, these metals also have important downsides. Most importantly, they don't pay you anything while you own them. Unlike bonds that pay interest or stocks that pay dividends, this lack of payments also makes it hard to figure out what these assets should be worth, which is another reason their prices swing so dramatically. The chart here shows that many different types of investments have made money recently, not just gold, silver, or other raw materials. It's important to remember this fact when you're investing and planning for your future. We hope you found these videos helpful. If you would like to learn more about any of these topics, please don't hesitate to reach out. Also, please subscribe to our channel so you can stay up to date on market happenings. Thank you and have a great day.